And welcome. It's Mary Ellen McGonagle here with your Friday afternoon weekly Edge show for June 2nd, 2023. Today, we're going to take a look at the broader markets. We had a very interesting close to the week, lots in the way of broadening out of market participation. We'll get into that. And then also some of the headline news that drove price action this week, followed by viewer question of the week. And it's all about how you can use ETFs to take advantage of some of these really pronounced moves that are shaping up. So first up, with the economic news for this week, we did see consumer confidence drop at the beginning of the week to a 6-month low. Not great news for the economy, for the markets. We also did see private job openings on the rise. However, Chicago business activity tumbled to a 6-month low. All of this was earlier in the week when we had that pullback in the broader markets that was also centered around the uncertainty regarding the debt ceiling deal. Now, that did get passed. That was good news. And certainly we can see as well, we had other news driving the markets this week, with the June interest rate hike being essentially pushed off the table after comments from several Federal Reserve officials who talked about that concept. And then also we did see construction spending and hiring remained strong. The data was a little bit dated from April, but it did show a robust construction market. We'll get into that a little bit more as it relates to housing stocks. And then really most impactful this week was that the employment numbers for the month of May showed a very sharp rise in new jobs, 330,000. Now with that, we did also see that wage gains were very modest. So the number really had something for everyone, in the sense that the sharp rise in new jobs shows that the economy is still expanding. However, that modest wage increase was good news because the Federal Reserve has been keeping a close eye on that. We want the wages to not increase, and by that, inflation would not rise as well. Next week, pretty quiet. We will get a service sector PMI number, factory order data, and then consumer credit numbers as well. So from here, let's take a look at the broader markets. Where did we close for the week? Here we are with a daily price chart of the S&P 500. A couple of interesting characteristics here. First up, I marked up this line and this area of very key resistance. You can see we had a brief rally above it back here in August. It's the 4,200 level for the S&P. We touched upon it here in February. However, this week we did again gain a close above this key area, and then today's sharp rally helped advance the markets further above that. So that's good news. We do have positive RSI, positive stochastics, so the momentum is trending upward as well. From here, let's take a look at the Nasdaq. This is the index that's been leading the markets higher this year. And we can see that the Nasdaq also broke above a key area of resistance at 313,200. And we're not up a lot. We just inched above it, but that is certainly good enough. However, it did push the Nasdaq into an overbought position. I'm going to talk more about that in my twice weekly MEM Edge report out on Sunday. So you will want to trial that if you are more interested in finding out about what happens at the Nasdaq here. And then also we're going to discuss a whole lot more relative to rotation and a lot that's taking place in the markets. From here, let's go ahead and take a look at the broader market ETFs. And by that, I mean the underlying 11 sectors in the S&P 500. I've added a relative strength indicator, sorted it descending order. So this 2-month daily price chart view is really quite helpful as far as highlighting where the current strength is and where we may be seeing sector rotation. So technology up here, it did underperform the broader markets, but certainly up here in the forefront, and we can see its leadership position. If I pull up a weekly chart here, you'll see that we are very close to approaching this late 2021 high. So again, tech up here in the forefront. From here, let's go ahead and take a look at an area that had a nice pop today, and that's consumer discretionary stocks. The employment data today really provided a push for these cyclical names that fare better when there is the possibility of a economic expansion due to job growth. So that we can see this big gap up here. A lot of that was Tesla, Amazon also on the move, but there are other areas in that discretionary space that are trending higher. And moving on, here we are with industrials, a big gainer, almost up 3% today, another cyclical area that fares well during periods of economic expansion. I'll get into some of the names there. Also an ETF that can be helpful if you are a believer that the move into industrials is sustainable. Next up, looking at some of these other areas, our financials had a big move up 2% today, another area that does well in a period of economic expansion simply because banks provide lending and their profit margins from that will help grow their bottom line. Down here in this lower quartile, we can see utilities, staples, and healthcare remained down here. These are generally more defensive areas of the market. However, we did see healthcare outperform a nice 3-day rally, and we are right up here at resistance. Momentum just now poised to potentially turn positive. If we could get that MACD black line up through the red, we could potentially see a nice continuation rally in some of these healthcare names. I talk about this in my MEMH report as well. Last up, basic materials up almost 3.5%. And again, a very heavy cyclical area. These are going to be a lot of those metals, those names that during economic expansion fare well. So you can see that while the technology area remains up at the forefront, we did see a nice bounce in these cyclical areas that could potentially provide that broadening out in the markets that we've been on the lookout for. I'm going to share with you an equal weighted S&P 500 chart. And the reason for this is because the broader market S&P has shown quite narrow leadership. And if you can look at the equal weighted, where every single name has an equal weight, it gives you a better sense of where we are relative to broadening out, participation, and so forth. Today's move into those cyclical areas pushed this equal weighted ETF up above key moving averages, your RSI now in positive territory, and we're on the lookout for a nice move in that MACD if we continue to see this broad participation in the markets. From here, let's take a look beyond those S&P 500 sectors and that equal weighted S&P view and look beyond at some of these ETFs that are really quite helpful in showing what else took place underneath the surface of the markets. And we can see up here in the forefront, IGV is the technology software ETF up here at the forefront. Software stocks up 2% this week, mostly on strong reports from underlying companies. And then semiconductors did pull back, but they had such a supercharged period last week on NVIDIA's strong earnings outlook. We can see that it did pull back very orderly. So they're very much still in a leadership position. As we move through, I want to share with you KRE. Now, this is one of the ETFs that if you are a believer that these bank stocks have bottomed, certainly a move above this 50-day moving average is constructive. We have a positive RSI, and then we can see that this MACD is just now poised to turn positive. KRE would be an exceptional way to participate in the potential downtrend reversal in these bank stocks. And then looking at some of these other areas down here in the lower quartile, I talked about consumer discretionary. Here's a quick look at retailers. This is XRT, the S&P equal weighted retail grouping, mostly equal weighted. And we can see up 4% today, not quite in bullish territory yet, but certainly an interesting bounce there. So from here, I did talk about the concept of using ETFs, certainly among industrials. We can take a look at some of these industrial names, certainly Bellwether, Caterpillar, had a huge move, up 8.5%, huge volume. This is certainly a bellwether name for the overall industry group. One ETF that is heavily weighted in these construction and industrial related names is PAVE, the Infrastructure Development ETF, and you can see it had a very pronounced move. Your momentum now shifting into positive territory. Certainly one-day rally does not a market move make, so you will want to be on the lookout to get these moving averages trending upward, similar to this October period, and then they will act as support as an advance continues. We also mentioned the move into housing stocks. Certainly today, another cyclical area that can fare well. And I will go ahead and share with you that housing ETF XHB is the ticker symbol. And you can see we did have a very nice move into home building stocks. However, this pullback was all about the sharp increase in mortgage rates up to about 7.4%. So we did see a nice downtrend reversal shape up today, a move above these shorter term moving averages with that RSI and that MACD now in positive territory. I'm going to leave it there. Everyone have a great weekend. I'm going to look for you again here next Friday afternoon. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.